All right, welcome back to another episode of the Black Bullion Show for goldandsilvertoday.com. Check that website out, everybody. So let's look into the future, big guys. After gold and silver recover and the economy becomes, let's just say, inoculated, so to speak, from what we call here the Ronies. Now, once this happens, prepare to see people returning to work. Some, here they're wearing masks, and a recovery pretty much underway. So what would the world look like for the metals once this happens? Well, if we take a look here, Goldman Sachs is holding on strong to their $2,300 gold target, by 2021. Now, you have to ask yourself, how can that be? Well, with all of the money printing that we did in March of 2020, it had to go somewhere, and we saw it seep into most asset prices, similar to what we saw in the 2010s. Gold and silver benefited, equities benefited, home prices benefited. The flood of fiat pretty much rushed through every artery of the economy. So once inflation truly returns, expect to see it impact real rates in treasuries. Now, turns out that Goldman Sachs is expecting an average negative 2.1% real return from short-term rates for the next 5 years. Also, demand from China and India is beginning to show signs of life. So, I would say one other metal to pay attention to during this time would be our red friend, Dr. Copper. Let's take a look over here. Take a look at some of the price movements this past year in comparison to some other years as well. But currently, we are sitting pretty at $3.18 per pound for copper prices. Now, a lot of that ground recently was covered post-election via the Biden bump. Now, with copper getting back to its, as you can see here, 2017, 2018 highs, the global market may be readying itself for a recovery. Now, also with that, gold prices heading lower and copper prices heading higher, the copper to gold ratio grows more positive, also buoying the anticipation of a global recovery. Take a look here. We have crude oil prices as well. Just take a look at where the WTI crude price, got up to. By the 11th, we almost got up to about $43 nearly. Got about to 42.97 for the December contract. Now, of course, all of these indicators are well and good, but I want to continue seeing non-farm payrolls data, as I'm starting to grow a little cold on the initial jobless claims data that we've been getting. Not to say they're not worth it, but we should start seeing an increase in, hiring if we continue to see jobless claims decrease, if we are to feel confident that a recovery is truly coming. So we need, if a recovery is coming, we need to start to see that hiring happening on Main Street. So that's what I'll be eyeing as time moves on. What do you guys think about Goldman Sachs sticking to their $2,300 gold call? I actually think it's pretty on target. We got almost as high as 2,100 this year, and with a proper economic recovery, getting people back to work, getting that sparking some more inflation, I can easily see that happening in 2021. So let me know what you guys think in the comment section below. Thanks again for watching. Please hit that like button. Please subscribe if you're new, It's Black Bullion for goldandsilvertoday.com.